Hello students, today we are going to start the first chapter of accounting, that is Introduction to Accounting of class 11th. So let's start. Meaning of accounting. Accounting is a systematic process of recording, classifying, summarizing, analyzing and interpreting the financial transactions and events, communicating the results to the users thereof. So this is the meaning of accounting, but to understand this meaning properly, we have to first understand the transactions and events. So let's understand what are transactions and events. Transactions. In simple terms, we can say that a transaction is an exchange of goods and service, and an event is an outcome of a business transaction. So let's understand these two terms with the help of an example. Suppose an individual invested rupees 2 lakh for running a grocery business. On 1st April, he purchased goods for rupees 1 lakh 15,000 and sell for rupees 1 lakh 47,000 during the month of April. Okay, so here what the individual does, he invested rupees 2 lakh for running a grocery business. Then on 1st April, he purchased goods for rupees 1 lakh 15,000 and sold those goods for rupees 1 lakh 47,000 during the month of April itself. Now again, he pays shop rent for the month rupees 5,000 and finds that he has goods worth rupees 15,000 in hand. Means in the month of April itself, he also paid the rent rupees 5,000 and at the end of the month, he is having goods worth rupees 15,000 in hand, which is remain unsold. Now, in this scenario, the individual performed an economic activity. Why economic activity? Because here money is involved, as he invested rupees 2 lakh for running his grocery business. Then he purchased goods of rupees 1 lakh 50,000 and then he sold his goods for rupees 1 lakh 47,000 and paid rent rupees 5,000 and having goods worth rupees 15,000 in hand, which was purchased here. So this all these activities performed by him is an economic activity. He carries few transactions and encountered some events here. So he what a transaction is, exchange of goods or service. So here what exchange he does, he purchased goods, he sold goods, he paid rent. These are all the transactions which he performed in this scenario. And some events. Event is what? Event is the outcome. So what outcome he got at the end? He got rupees 15,000 worth goods in hand at the end of the month. As we know, he has performed some events and transactions here. So is it not logical that we want to know the result of his activities? So let's find out what result he got at the end of his activities. So let's start with the income part. What income he got? He got income by selling goods. How much income he got by selling goods? 1 lakh 47,000. Then he's also having goods worth rupees 50,000, which he will sell later. So goods in hand, rupees 15,000. So total income with goods in hand is 1 lakh 62,000. But for getting these goods in the business, he has paid some amount outside so that he can get the goods inside the business. So let's deduct that expenses from these incomes. So less. First, he purchased goods. How much? 1 lakh 15,000. Then what he did, he paid shop rent, rupees 5,000. So at the end of these all these activities, he got a surplus of 42,000 in hand. So by performing all these activities, he got a surplus of 42,000 in hand along with goods in hand rupees 15,000. So let's come back to transactions and events. Here, the selling of goods, purchase of goods, shop rent are called transactions because here exchange of goods or services is going on. But this surplus and these goods in hand can be taken as the event because it is the outcome of these transactions. So by this example, we can understand what a transaction and event is. Now come back to meaning of accounting. So again, accounting is a systematic process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions and events, communicating the results to the users thereof. Means we have to work systematically in accounting and record, classify, summarize, analyze, and interpret the transactions and events. And after that, whatever the results we get should be communicated to the users of accounting, like creditors, banks, financial institutions, governments, owners, etc. We will later in this video deal with the users of accounting separately. So let's go to the next slide. Now, definition of accounting. AICPA means American Institute of Certified Public Accountant has given a definition of accounting which is acceptable all over the world, which says accounting is an art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of financial character and interpreting the results thereof. Here in this definition, same thing is said about the accounting like meaning of accounting. So there is nothing to explain. We'll just go through the characteristics of accounting. Now, characteristics of accounting. There are seven characteristics of accounting. First is identification, second is measurement, third is recording, fourth is classifying, fifth is summarizing, sixth is analysis and interpretation, and seventh is communicating. When we, after understanding all these characteristics, we will be clear with the definition and meaning of accounting both at the same time. So let's understand the characteristics one by one. First, the first characteristics of accounting is identification. The primary function while performing accounting activities is to identify those transactions and events which are related to the business. Here in this characteristic, we identify those transactions and events which are related to business, which is also a primary function of performing accounting activity. Now, second characteristics is measurement. After identifying the transactions and events related to business, the second characteristics of accounting is to measure those identified transactions and events into monetary terms, which means only those transactions will be considered in accounting which have financial nature and they affect the position of the business. Means only those transactions which can be measured in terms of monetary. In monetary terms means where money is involved. only those business transactions are recorded in the or only those monetary transactions are considered as the business transaction in accounting. The third characteristic is recording. After measurement of the transactions and events, we record those transactions and events in the books of accounts, which is also known as book of original entry. So after measuring the transactions, that they are monetary or not, means money is involved in that or not, we record these transactions in the books of accounts, which is also known as book of original entry, and generally we called it journal book. This journal book is a primary book used in accounting to record the day-to-day transactions and events. We will deal with this journal book later in the upcoming chapter. So let's go to the fourth characteristics of accounting, that is classifying. After recording the transactions in the books of accounts, we classify them under one nature at one place so that we can easily find out the information related to those transactions. Like if a transaction is related to cash, we did many transactions related to cash in the whole year. Then we write all these transactions where cash involved at one place so that we can get information of cash whenever we need it. Like if a business is continuously selling some products like computer, so we will make a computer account and classify all the transactions related to computer at one place, this computer account. And whenever we want the information about this computer, means how much computer we sold, how much computer we purchased, what are the stocks left behind, we can get all this information by seeing this computer account. So classifying is very much important while working in the accounts, or it is a very important characteristics of accounting. After that, the fifth characteristic of accounting is summarizing. After classifying all the transactions and events of one nature at one place, we summarize all this information so that it can become understandable and useful for the various users of accounting. Summarizing part is related to preparation of trial balance, cash book, subsidiary book or special purpose book, etc. And one point also to be noted that under summarizing, we also prepare final accounts of financial statements of the company. Now, the next characteristics of accounting is analysis and interpretation. The analysis and interpretation of financial data helps the user of accounting to ascertain the financial position of the business and make meaningful judgment regarding the profitability. Means after preparing these financial accounts or financial statement, so after preparing these final accounts of financial statement, the management of company analyze and interpret these financial data and with the help of users of accounting and ascertain the financial position of the business so that it can make meaningful judgment regarding the profitability. In simple terms, we can say that we analyze the financial data so that we can understand that our company is going towards profit or loss. If it is going towards profit, we focus more on increasing our profits And if it is going towards loss, we focus on how to minimize this loss and make our business profitable. So here are the characteristics of accounting. The last characteristics of accounting is communicating. So the seventh characteristics of accounting is communicating. Whatever the financial statement we prepare it for the users of accounting, which can be bifurcated into two parts: internal users and external users. Internal users are the management, owner, etc., and the external users are banks, creditors, government. All these are the external users of accounting. So these all these information account or we can say all this accounting information are prepared for the users of accounting so that they can understand where the company is going and what is its future. As I already said, we will deal these users of accounting later in this video, so wait for that. Now, process of accounting. The accounting, as we know, starts with the financial transactions or events. First, we identify that these transactions and events are of financial or business transactions or not. Then we record them, then we classify them, then we summarize them, and at last we communicate the accounting informations to the users of account. So this process is just the characteristics of accounting. Or we can say the characteristics of accounting is the process of accounting. In this manner, we do the accounting. Now, let's come to some important terms also for understanding more about accounting. First is bookkeeping. Bookkeeping is an art of recording books of, in the books of accounts, the monetary aspect of commercial and financial transactions. It is a part of accounting. It is concerned with the identifying, recording, and classifying the economic events of the and transactions. So, bookkeeping is a word. We can simply say that bookkeeping is managing the books of accounts. And what are books of accounts? Like we already seen that journal is a book of account. Journal book. So under bookkeeping, we perform the first three process of accounting. That is identifying the financial transactions and events, measuring them that they are monetary or not, then to record them in the books of account. These three aspects is related with the bookkeeping. Now, second is accounting. Accounting is a wider concept than bookkeeping. It starts where the bookkeeping ends. Means accounting starts where the bookkeeping ends. After recording the transaction, we start doing accounting. It is trying to say that it is concerned with the summarizing the economic transactions, analyzing and interpretation of economic transactions and events, and communicating the results to the users. So after this recording aspect, the rest of the part of the process of accounting is considered under the accounting. Like after recording the transactions, we analyze it, interpret it, summarize it, and get the results of the accounting after the accounting process and communicate that result to the users of accounting later on so that they can take the decisions related to our company. After that, another term is accountancy. It refers to the entire body of the theoretical knowledge of accounting. It it is the theory part of accounting where the accounting relates to applying the knowledge of accountancy. Means it is related to the process or law. Or law. under which the whole work of bookkeeping and accounting is done. It is just the theoretical knowledge of accounting, that how we have to do the bookkeeping and how we have to do the accounting. So these are the basic and most important terms of accounting. First is bookkeeping, which is related with the management of books, under which we identify the transaction, measure them, and record them. After that, second is accounting, where the rest part of accounting process, that is summarizing, analyzing, interpretation, and communicating the results to the final users of accounting is done. And third is accountancy, which shows how this bookkeeping and accounting has to be done. It is related to the process, procedure, and or law of accounting. Now come to the next slide. Do you know who is the father of accounting? Luca di Pacioli is the father of accounting. He was a great mathematician in the ancient times, and he invented the accounting, or we can say he invented the double entry system of accounting. What is this double entry system of accounting? We will deal with this term also in the second chapter of accounting, that is basic terms of accounting. Now, just remember that the father of accounting is Luca di Pacioli, who was a great mathematician and also the inventor of double entry system, where we record the incoming and outgoing of the money. Yeah, or we can say inflow or outflow of money. Now next, objectives of accounting. So there are various objectives of accounting. Some are written here, which are the most useful objectives of accounting. You have to remember all these objectives of accounting. I'm reading it. First, to maintain the systematic and complete record of business transactions in the books of accounts. So, the first objective of accounting is to maintain a systematic and complete record of the business transactions in the books of accounts, so that we can use it whenever we need. Second objective of accounting is to ascertain the financial position of the business. All these accounting activities are done to know the financial position of the business. Financial position means what are the position of the assets and liabilities of the business at the end of the year. So all these accounting activities are done to only know what is the position of assets and liabilities in the end of the year. What are the assets and what are known as liabilities? We will deal in the second chapter. Now, third objective of accounting is to ascertain the profit or loss incurred during the particular accounting period. Means whatever business we are doing, we are earning profit or loss. This information is ascertained by the accounting process which we follow, or by the accounting activity. Now, the last objective of accounting is to provide useful information to the various interested parties. As we are running a business, various persons are related with this business, like our creditors, our employees, our management, our government. So all these interests are the interested parties, because traders have to supply the goods to the business, and they want to know that business is earning profit or not. If business is earning profit, they can get their money back. Like government have to uh, collect taxes from the business. So they have a complete eye on the business so that they can know what is going in the business, whether they are able to uh, give the taxes or not. If they are not able to give the taxes, then what is the reason behind that? So all these informations are useful for the interested parties like government, banks, management, etc. So these all are the objectives of accounting. Now come to the advantages of accounting. First, it helps in the present preparation of financial statement. Second, it helps the managers in the decision making process. Third, systematic accounting record act as a valid evidence in the court. Fourth, accounting information is used to compare the results of the current year with the previous year to analyze the changes. Fifth, it helps a firm in the assessment of the correct. Fifth, it helps a firm to ascertain or assessment of correct tax liabilities such as income tax, sales tax, etc. etc. So all these are the advantages of accounting. Or we can just revise it that it helps in the preparation of financial statement, it helps in the decision making to the managers, it helps in the systematic record so that we can have evidence in the court in different scenarios, or it helps us to analyze the changes going on in the business, and it also helps a firm or a company to assess its correct tax liability towards the government, like income tax, sales tax, etc. So these are the advantages of accounting. But if anything has advantages, it is also having disadvantages or limitations. So limitations of accounting are, we can also say, disadvantages of accounting. So limitations or disadvantages of accounting are, first, it is historical in nature. It does not reflect the current worth of the business. In accounting, we use the historical nature. Historical nature will be discussed in the third chapter, where we will discuss the accounting standards and accounting theories. There, I will explain what is the historical nature of accounting. So, just remember it, it deals in the historical nature. Figure given in the financial statement ignores the effect of changing price level. So, the accounting figures ignores the changes in the price level. All these things are some technical accounting standards, or we can say accounting theories, which we will deal in the third chapter. So just remember it only now, and we will discuss these things in detail in the third chapter. Now, third limitation is it ignores the qualitative elements, means the quality of management, the quality of employees, the efficiency of the working condition cannot be considered in the accounting because they cannot be measured in terms of money. Like if an if a employee A can produce 200 units in 1 hour, and employee B produces 300 units in 1 hour. So he employee B is more efficient than employee A, but we cannot record his efficiency in the books of accounts because we cannot measure his efficiency in terms of money. So the qualitative elements are ignored in the accounting process, and only the quantitative elements are recorded, which and those qualitative elements which can be measured in terms of money. Only those qualitative elements are recorded in the accounting. Qualitative elements are fully ignored. Fourth, it may be affected by window dressing. The term window dressing means manipulation in accounting. which means we can manipulate the accounting information according to our use. As if we want to show profits more, we can manipulate or hide some information so that we can show our profit more, so that our financial statement looks good and we will get a good record or good image in the market. So it is affected by the window dressing because it depends on the who is accountant who is managing the accounts, that he is giving correct information or not. The fifth limitation is it is not free from personal bias and personal judgment of the people dealing with it, as it is affected by the window dressing. So it can also be affected by the personal bias or personal judgments. Like we can say that getting 20% profit can be good for some persons, or and getting 20% profit is less for some persons. So it depends upon the personal judgment or personal biasness of the people dealing with the uh, accounting information. So all are the limitations of accounting. The rest we will do later. Thank you so much.